Hello, I'm Sri Priya from ERA Realty Networks. Welcome to my second video on the Property Insider Singapore series. In this continuing COVID pandemic series, I'll explore correlation between stock and property market. If the property market can crash like the stock market, capture from April 20 onwards. Correlation between stock and property market. Is the property market different from stock market? To begin with, stock market has no cooling measures. Secondly, SSD, TDSR are unheard of in stock market. Shares can be bought and sold without financial checks as long as one has cash. With TDSR in place, most owners can afford to service the mortgage. Further, cash-tight owners are going to be helped by the proactive government. The government is going to support the property market. But for stock market, nothing of that sort exists. Then there is the margin calls. Let's examine if there are potential margin calls in the property market. ABSD was introduced in 2013 as a cooling measure. Most of the buyers are first-timers as indicated by the Revenue Authority statistics, at least for the last 3 to 4 years. So for the first-timers, usually 25% is a down payment and the 75% is a bank loan. That's the bank's money, while the 25% cash belongs to the buyer. During a downturn, as long as there is no sale below 25%, the banks have no objection. But if it is exceeded, then the banks will certainly swing into action. So this allows us to examine if there are any fire sales. The market has to drop 25% lower from the current pricing in order to attract a margin call for the properties from the bank. Now the TDSR has done a great job to prevent this. We all know the TDSR ensures that the owner is of a certain financial worthiness to hold the property. So next, let's see if there are foreclosure of assets rising with mortgage default in 2020. Let's first examine the first quarter 2019 to first quarter 2020. The transactions have been from 7, it is 4 only, but no sales. The commercial doubles in numbers, but with 0 transactions, and the industrial has no transaction as well. So what does that mean? No transaction means no fire sales. So as of July now, there are private treaties that are happening, but they're happening for different reasons. They are from buyers who don't want to buy, who don't want to pay ABSD for second properties, and they're looking to offload at reasonable prices and such reasons. So they are the same listings from second quarter. Of course, the comparisons are fair, but we have to be cautious in our outlook. The worst may be yet to come. Are we at the beginning of an end or the end of a beginning? So the bear chooses to think that the next shock wave is coming and it's better to be conservative and not take bold decisions at this time because there will be tough earning results for the next 2 to 3 years when the financial results are presented in the markets. The stocks will fluctuate, as you may already know, based on the profit and losses. During a lockdown, it's likely that there won't be great results. There'll be a drop in the stock market. So there are also raising concerns on the unemployment, and this will continue to play up as this is the beginning of retrenchment. In the US, it was close to 15%, the highest since 1940, climbing further as of date, and even higher than the global financial crisis. In Singapore too, it's no different. MAS has been warning of job losses and unemployment at 4 to 5%. Currently, it is at 3%. This is a dark cloud that's hanging over the heads of investors. Singapore's unemployment is proportional to US unemployment. During global financial crisis, the US hit 15 million and Singapore reached about 100,000 nearly, 91,900. And during this COVID, as of April, it's 26.5, and so it's projected to be around 4 to 5% in 2020. Thanks. But I choose to look at the brighter side. The government and central banks are willing to do whatever it takes to protect economies and support financial markets. And in Singapore too, the government is very proactive to bring back the economy. So they brought 3 budgets amounting to $60 billion in the form of reserves, helping with rebates, subsidies to individuals and companies. And the government has promised that it will do everything in its capacity to keep the economy going and create jobs. And I think they'll continue to watch this as well. So, because bankruptcy, unemployment, retrenchment are the ones that will result in forced sales of properties. During financial hardship, the last thing you want is a liability. And the government is doing everything to prevent this from happening. 17,000 applications as of May were filed for deferring the payment of principal and interest or both. So would there be fire sales? Not really. The MAS support, bank support, refinancing, deferment that are not subjected to TDS are all helping. So why they are giving so much support? It's about the financial industry. It's not so serious to fail as a owner, but it's too serious to fail as a bank because the properties are pledged to banks and they own these assets. They are too big to fail. So far, any crisis in the economy, the banks are affected. So that's why MAS and banks are working together. The developers also get 6 months extension on ABST remission deadlines. Everybody is included. What actually is the government doing? They are supporting the property market unlike a stock market. So another favorable factor for the property market. But if you're still bearish and think property market will crash with stock market, I'll say it is true to an extent. During 1997 and 2008 financial crisis, the STI, PPI, and the Dow Jones, they were all greatly impacted. So in 2020, this STI is down, the Dow Jones is down, the property index, will it also go down? What do you think? So here is the correlation between stock market and property market. So in 1997, during Asian financial crisis, the Dow Jones hit minus 11.1, STI 64.9, and PPI was 42.2. Further, there are data here on the overall property prices, median prices for Singapore, and that's split into regions. So if you compare them straight away with 2020, you can see that the impact is all there, but there is actually a positive increase in the OCR. So are we expecting a property crash like the stock market? Where do you think the property market is heading? Although I hope to cover both topics on correlation of property and stock market and direction of property market in Singapore. In order to keep the video short, I have the first point in this video and I'll follow it up with the second point in the next one. Thanks for watching. Bye.